End up switching over to an S-Corp, okay? So, and originally we were as an LLC. So one of the biggest advantages that I know of, and again, just take this for if you know literally nothing, that this will get you at least a few steps in the right direction. If you already are well-versed, you're probably not going to learn anything, right? So number one, going from an LLC to an S-Corp. So the biggest thing for us is the concept of dividends, okay? So with an LLC, it's basically, whatever revenue comes in minus your expenses, you're left over with that profit, and then typically as, especially smaller companies, you're taking that as your more or less like a salary, right? And so in this example, just say you're taking like 100,000, right? And well, when you're set up as just an LLC, you're taking the full tax burden of someone that's just making $100,000. So like pretend you're paying one of your employees $100,000 a year, you are paying the same tax rate as like what they would be, right? Now, obviously you can write things off and things like that, but at the end of it, again, whatever your total revenue is minus your expenses and, write-offs and stuff, if it's $100,000, you're paying the full, whatever that's going to be for like employment taxes and like all that kind of stuff, right? And whereas the biggest advantage of going to an S-Corp is now what's happening is you're going to take what's called a reasonable salary, right? So think of like what you do, right? So if your day-to-day is pretty much like you are, as a fence company, like you pretty much are like a fence installer, right? Because you're still installing what you sell and things like that because you haven't, brought in other people and, whatever. So what you realistically could do is, again, talk to your accountant, but you can, a reasonable salary for someone that's like installing fence, maybe as a foreman, maybe it's something where like you're paying yourself, $40,000, $50,000 a year, right? And so that's a reasonable salary because someone to replace you, if you're the one that, again, installing fences and you really just need a foreman, how much would you pay a foreman, right? And, if you're paying on $20 an hour or 25 or whatever, you're looking at like $40,000, $50,000 a year, okay? So you'll take that as your regular salary, and then the remaining that, if you're taking, just say 50 and 50. So, if you're taking 50 as a salary and then you take the 50 as a dividends, you end up paying a lot less taxes on it because you're not dealing with the payroll taxes and things like that. I don't know the exact percentages and shit like that, but this is a good way where you can end up saving a shit ton of money, right? I shouldn't say shit ton, but you might be able to save like an extra $5,000, $10,000 a year in taxes, right? So that is a good way to do that. The next way is, and also with an S-Corp, apparently LLCs are the most audited accounts out there, right? Whereas if you go into an S-Corp, they're much less likely to be audited. Now, I personally went through the whole audit process. It is not something you want to go through. If you are not organized with your stuff, it is not fun. It took forever to get everything together. The amount of printing and everything else I had to do was it was ridiculous. Plus, it's not only just your own time, but then it's time for your, for the accountant and things like that. So then, you're spending all your time, plus you're paying all your accountant. Last year, my wife needed we needed a vehicle, right? Or if I need a vehicle, or could be forklifts, whatever. Like we did forklifts for a few years as well. So what is a large purchase that you can make? Oh, nice Aston Martin. So anyway, what are the nice, sorry, thinking of the Aston Martin still. So what are like the large equipment? So like, do you need a new truck or something like that? Well, I think it's section 179. So with these large pieces of equipment, I forget the exact percentages. It might still be 100%. It might went down to like 80 or whatever. But you can purchase that vehicle, if you finance it or whatever, is that just say the vehicle is $70,000. What you can do is, is this unclear? What you can take is the full, price of that vehicle and actually get that written off, right? So in this case, like we were looking at a CNC chop saw. Now I just messaged her back because like there's a few other options that we can do with, you know, basically spending money, right? And so the chop saw was somewhere around I think it was like $35,000. Somewhere around there. So we can write off that full amount, and what'll end up happening is it's going to save us about $8,000 in taxes, okay? Well, you could either pay that money outright or you could finance that, and then so you didn't even pay for the full amount, but then you can basically take that as a write-off. Now, that's just another way you can save money. With my previous accountant, she would always be like, don't spend any money. Whereas this one's like, looking at towards the end of the year, it's like, you got to spend some money. Like, is there anything you need? Like, go spend it. Because if there's, you know, if you need a vehicle, you need a truck, whatever, and you're using it for work, and it's $70,000, well, you might end up saving yourself like $15,000, $20,000 in taxes. So go for it. And the best part, like I said, is if you finance it, then you're not paying all that money up front. You're paying that $1,000 a month, $1,500 a month, or whatever it is, but you're saving that. In that case, you're probably saving a good, again, like $15,000.